Hey everyone, welcome back. So, wow, we just saw. Well, actually, I did on CNBC. There was just someone who was interviewed, and he had this argument that really there hasn't been in recent history a recession that has really been caused by anything other than Fed or regulatory error. And I thought it was a really interesting argument that I haven't really heard of recently. But the more you kind of put your head to it, the more it's kind of like, oh yeah, it oftentimes is either government that screws up or the Fed that screws up, that ends up leading to crashes. We had massive inflation from price controls in the 60s. We had 2008 recession led by a disastrous lack of regulation and the allowance of insanity in the real estate market and absolutely unsupervised lending. And it begs the question: is it possible that the government could overreact, or the Fed could overreact to what we've got going now? The inflation that we're seeing now. So who knows? But it was very interesting that really this argument that it's government that could screw up, or the Fed, in how we end up reacting to what happens here, and perhaps it's best to let the market play it out. I don't know. What do you think? Do we let the market play out inflation, or or is it time for the Fed to step it up and squash that inflation bug? So let's take a look and see what's going on today. We've got in the markets. Let's see here. We have Dow futures up 0.16, S&P up 0.01, so basically flat. NASDAQ also pretty much flat at 0.05 to the downside. I do have some really good numbers coming out of Home Depot and Walmart. Both of them killing it in terms of earnings. But not only that, raising their guidance for sales. And this is pretty bullish, especially for online sales. Suggestions that Walmart is raising their guidance for online sales despite inflation that we're seeing. And the stock is down 0.89% here despite some solid insights. But this raised guidance on sales, really, really incredible. I'm going to grab it specifically here. Let's see what we get off of Walmart. Let's see here, individual company news. And I think it's bullish as well for like Etsy and some of these other companies. Okay, let's see here. Walmart raises full year sales profit forecasts as holidays. Okay, so it was a guide raise. Let's see here. Walmart. Okay, let's see here. Oh yeah. Okay, here we go. Here are their earnings. Oh, sweet. Okay. Oh man. There's so much. Hold on. There's so many updates out of Walmart. It's gonna take me a second to actually pull it up. But that's pretty good. It did look like it moved up at one point as much as 2.5% in the free market. It's gonna take me a second though to actually get all of the details on the news. So we'll come right back to Walmart here. There we go. Okay, we'll come back to Walmart. So oh nope, there it is. Finally. All right, here we go. So, okay, yeah, here we go. All right, so they raised their forecast to $6.4 for the fiscal year. That's up from $6.20 to $6.35. So that's outside that, definitely outside the previous guide here. Walmart comp sales around 5%. Let's see here. Walmart EPS beats by 6 cents, beats on revenue, and raises full year guidance. Let's see here. Jumps on earnings by comp sale beat. Adjusted EPS came in at 145. Expectation was 140. That's also impressive with a company like Walmart because usually the estimates aren't too far off on Walmart. Walmart gained, it was up. It was up almost 2.8% in pre-market. Comp sales soared. Okay, good. COVID costs remain elevated globally, but lower than last year. And Walmart prices rose and consumers shopped early for the holidays. Peloton, by the way, also raising $1 billion. Their stock initially dropped like 8 or 9% here in the pre-market, but they ended up rotating back up after they mentioned that they already have a buyer. That was right here. Freaked out the market, and when the market realized it wasn't going to be sort of a here, let's just go to the stock market and raise money. The stock actually recovered. Because keep in mind, when a company raises money, they're sure they might be selling shares, but they're getting cash in response to that, which is a good thing. But oftentimes the market reacts negatively to that. We get these sort of drops here, and that's because there are now more shares available. And anytime you increase supply and you keep demand constant, price goes down. Very simple. Yeah, so but that Peloton move here has pretty much recovered. It's actually up 1.47%, cheering the fact that the company is going to be able to raise a lot of money here. So momentum slowing a little bit here on Matterport. Look at that. Matterport, at least in the pre-market, looks like it's down about 5%. Not a surprise coming off the crazy run. I think it was, 20% yesterday, that Matterport rate? Yeah, look at that. 22% yesterday. That's pretty incredible. Then let's see here. Then we've got Beachbody was a disaster. We covered them yesterday, and big revenue miss, bottom line miss. Not very good. Kind of following in Peloton's footsteps, unfortunately. Blink Charging down 6.4. Wow, Arcimoto down 5. Wonder if there's some news on some of these in terms of why, but some of them have been running, with the exception of Arcimoto, though. That hasn't been running, sadly. What is running, though, are some of the other EVs. Take a look at this. Lucid up 10.5%. I'm not sure if it's because of the Motor Trend Award or potentially a combination of the fact that the CEO is going on CNBC later. Sometimes it is, because you get this excitement over somebody hopping on to CNBC. You've got Rivian up again, up about 10% here, and GGPI up about 4.3%. This is an incredible, like, euphoric rally here, really on the EVs, both Rivian and Lucid, which is great in terms of actually helping Tesla not fall to the earth here on all these sales. Elon Musk selling off another almost $1 billion. It was like 970 million or something like that. Still got a lot of work to do, which is kind of annoying. It's like, get it done already. Pull the bandage off. Then create some real buying opportunities for folks, but then have it over with. Just get it over with. Oh well. So all right, let's see here. Looks like Walmart CEO is going to be hopping on CNBC to chat about their boosted outlook. Talk about inflation. It'll be interesting. There's so much talk about inflation. That's all they can talk about, especially, I mean, look, even Bloomberg here, that's what they're talking about, ramping up the pressure on the Fed. Let's see here.
Flexibility and how he approaches the growth concerns over next year, and if we do see this slowdown back towards trend, and of course, the big inflation question.
Clinton Warren, does it make a difference who the next Fed chair is?
Yeah, I think it does. If they're going to change the path that we're currently on, if they're going to become more hawkish than the market has expectations. But we also got to remember this is a dual mandate, right? It's inflation and labor.
All right, we're going to pull off this. Let's hop back on over to here and let's see what we got here. So U.S. retail sales jump by the most since March. You know, what was interesting was we had China that this weekend had big expectations that their retail sales numbers were going to come in with a big miss, and we were going to witness a big slowing of China. And China's retail sales numbers came in with a big beat, totally beat expectations. And now we're up in the U.S. as well. Purchases rose 1.7% in October without adjustment for prices. Receipts rose in nearly all categories, including electronics. U.S. retail sales rose in October for a third month, signaling households continue to spend, even with the fastest inflation in decades. The value of overall retail purchases increased 1.7% last month, the most in 7 months. Excluding gas and motor vehicle sales were up 1.4%. Looks like the economists' median estimates were about 1.4%. And this right here gives you kind of a little chart here of retail sales jumping. Which was interesting is you really see the effect of the stimulus right here. So we passed the $600 stimulus right here in December, which really, because it was passed like December 26th, really ended up passed or in people's wallets for spending in January. And then Biden passed the $1,400 in February, which ended up in people's wallets in March. So you got these huge moves here in people just blowing the money, which I suppose that's the point of stimulus money, is that people are going to actually spend it. But it kind of blows my mind sometimes how quickly people blow it all. But anyway, yeah, this is good because this is unstimulated. Well, I mean, as long as you don't consider the Fed's bond buying, which doesn't directly go to individuals, of course. It's more of a top-down approach. Anyway, right. Let's see here. Robust demand from households, Walmart, Home Depot. Yeah, people, and this is one of the downsides. People get into owning real estate, and then they see home prices going up, and when home prices go up, they justify spending money like crazy on homes and real estate. And it's a big mistake. Don't over improve real estate. It's very bad. I'm not a big fan of it at all. But I consistently, I'll say that, and I consistently see people over improve their homes. Like, hey, I sold you your home. Don't over improve it. Drive by like a year later. I'm like, oh my gosh, I can't believe you spent money on that. And that's just the outside. Like, I don't even want to know what y'all did on the inside if you did that on the outside. That's crazy. 930 mil was how much Musk ended up selling. That's right. There was also a lawsuit by JP Morgan. Let's see here. Where's that JP Morgan lawsuit again? All right, so hold on here. So Elon, that adds, okay, so that brings him to, what is that, 7.8 billion that he's already sold. So he's got to get to 17. So he's still got a quite, shares. Hold on, I would do under, okay, should dispose 10% of his stake. He's still got a bit to go. All right, let's see. And where's the, I want to see the JP Morgan lawsuit here. All right. Musk would need to sell some 17 million shares, more than double the 7.3 he's already offloaded in recent days. Yeah, exactly. Yeah, they didn't include the JP Morgan talk. Where's the JP Morgan lawsuit? JP Morgan suing Tesla. JPM Tesla. Let's find it. There we go. Look at this, folks. JP Morgan sues Tesla over $169 million over warrants. Remember that warrants are essentially options, but rather than with third parties, aka derivatives, they are with the company. They're actually contracts with the company itself. So JP Morgan sued Tesla on Monday for $162.2 million, accusing Elon Musk of flagrantly breaching a contract related to stock warrants after its share price soared. So obviously, if the share price soared and it's true that JP Morgan had warrants or options, then they should be entitled to shares, unless, of course, JP Morgan let those expire or the contract, for whatever reason, the price was below the strike. But anyway, according to the complaint filed in federal court, Tesla in 2014 sold warrants to JP Morgan that would pay off if their strike price were below Tesla's share price upon the warrant's expiration. Exactly. It's just the reverse way of saying it. If the stock were higher than where the strike price was, then JP Morgan would benefit. JP Morgan, which said it had the authority to adjust the strike price, now this is a little confusing, said it substantially reduced the strike price after Musk's August 7th, 2018 tweet that he might take Tesla private at $420 per share and had funding secured, and reversed some of reduction when Musk abandoned the idea 17 days later. But Tesla's share price rose approximately tenfold by the time the warrants expired. And JP Morgan said this required Tesla under its contract to deliver the shares. Seems to make sense. Though JP Morgan's adjustments were appropriate and contractually required, Tesla has flagrantly ignored its clear contractual obligations to pay JP Morgan full. It'd be worth going through the complaint to see what it looks like maybe Bloomberg did here. So Tesla sold the warrants to reduce the potential stock dilution from a separate convertible bond sale. JP Morgan said it had been contractually entitled. And let's see here. Automaker complained that the bank's adjustment were opportunistic and trying to take advantage of Tesla's volatility, but didn't challenge the underlying calcs. It's interesting here. I don't really see a real counter offer or a counter argument by Tesla, so I'm sure we'll see a response to the lawsuit. We'll probably have to wait for that response and their answer to JP Morgan's complaint to see what kind of argument Tesla's going to end up having. Might be worth looking at the lawsuit though. But that's interesting. Anyway, see, Tesla goes into these cycles, these like FUD cycles. It's very interesting. All right. So Tesla, by the way, in reaction to the fact that Elon still has to sell roughly twice, and this JP Morgan lawsuit, is that Tesla is down about 0.92% in the pre-market. This comes at the same time as other EV makers are rallying, specifically Rivian and Lucid, both up 10%. Lucid knocking on the door of $50 per share, with a Rivian at $165 per share. Peloton, by the way, also up 2.25% after announcing that it's going to raise $1 billion and that it has the buyer demand essentially secured. Xpeng moving up a little bit. When is Neo ever going to move? So Xpeng moves, but not Neo. Industrial production numbers just came out. Let's take a look at this. So industrial production came in at 1.6% versus 0.8% estimated. And here we go. Let's listen in here for a moment.
Over the last couple of years, but what are you seeing right now on the labor front in terms of your ability to attract and retain talent, and/or whether you're coming up short in part, as so many other businesses seem to struggle to find labor?
David, it's much better. Here in the U.S., we saw a pretty significant change as the government stimulus started to go away. And we are in full employment at Sam's Club U.S. Walmart U.S. a few weeks ago really saw a step change in hiring. We're not as concerned about that as we would have been, say, 2 months ago. We're in good shape for the holiday.
I like the B-roll of sanitizing the carts.
And in our supply chain as well as in our stores.
Hey, Doug, the White House had some comments the other day about large retailers and the shelves being adequately stocked for the holiday. Did you give the White House any color? Can you share some of that? And also some of these, I guess people are calling them novel practices of securing your own freighter to get containers to the U.S. Is that something you're actively involved in?
It is, and we're grateful for the help we've been getting from the administration and others to solve these.
All right, I'm going to pull off here. So, all right, let's see here. So yeah, industrial production numbers, let's see here, 1.6%. The previous was a decline of 1.3%. This came in at 1.6. That's over the estimate of 0.9. Capacity utilization was 76.4%, also beating the estimate and the previous read of 75.2. And manufacturing SIC production, 1.2% versus 0.8%. So beats. It's kind of what we've been seeing just in this market, is that the economy is surprisingly strong now. I think you hear a lot about people kind of pooping on this economy, and it's mostly the biggest argument is the pricing changes, the inflationary pricing changes. But beyond that, the underlying economy appears to be strong. Who knows? But certainly has left me bullish to where I'm all in. But we'll see. Look at this Riot blockchain down 10.74%. Let's see what's going on with Riot. Oh, Riot. So let's see here. Well, you have to, wallet address. You'd have to just tell me what coin you want to use if you want to buy something in crypto. It's kind of inconvenient to try to handle a transaction for one person here on a live stream. So yeah, just send an email. Riot blockchain drops after missing Q3 revenue earnings estimates. So we have Riot blockchain. Let's see here. Okay, Riot blockchain Q3 revenue was 64.8 million. And net loss was 15.3 million. EPS was a loss of 16 cents, and that's down 4 cents from a year ago. Doesn't I guess, help that at the same time as the Riot earnings came out, crypto's kind of been selling off a little bit. Yeah, I know for a lot of people, this is like, oh, it's not a crash. It's just a day in the life as a crypto investor. Crypto drops 7%. Nobody cares in crypto. Dow drops 7%. Everybody loses their mind. Like, those are the kind of annoying comments I see sometimes. But it's still substantial. I mean, 7% across the board here. 7% on Bitcoin, 8% on Ethereum. This is the largest drop that I want to say we've had since September in Bitcoin. Solana is down 6.87%. You've got Cardano down 6.7%. Dogecoin down 7%. Sheaves down 5.5%. A lot of the cryptos down. Algo's down 10.5%. Axie's down 7.3%. What else here? Mana's actually at 322, nice, but still down. Oh, it's up 26% on the week too. That's pretty nice. It's actually only down about 1%. The whole like metaverse excitement seems to come in these like waves. It's like all of a sudden, oh, we're excited about the metaverse again, and then all of a sudden we're not. All right, let's see here. Let's go on in here. So we've got pre-market. Let's see here. Playboy had a nice beat. We've got Lucid, Rivian, same thing here. These guys holding on. Peloton's moving up. They were up 1% when we started the stream. Now they're up 4%. They've been rotating straight up here. So good job, Peloton, on raising money and actually having your stock go up. That's great. Lowe's, Xpeng, JD. Yeah, I have to say, I am surprised that DWAC is still holding on to about a $60 price. That's incredible. That's just absolutely incredible. Yeah. Wow. All right. So anyway, is it a good idea to sell out and pay credit card debt? My goodness. I think if you're well up on your positions and you're in credit card debt, not financial advice, get out of credit card debt, because then you can actually also get into real estate, which I feel like I belabor that point, but please get into real estate. It is a little crazy though, the market right now, especially when you have people who just bought homes last year that are like, hey, I bought a place last year and I'm up so much that now I want to refinance and go buy another property. And so as a rental property. And then, of course, people who don't own real estate hear that and they're like, rah, we need less investors buying real estate. Rah. Yeah. Well, unfortunately, that's the whole free market game. All right. All right. So what else? Let's see here. All right. Let's see. So other headlines. That's what we want. We want other news. Other news. All right. Let's go to Wall Street. Wall Street Journal. What we got over here? Shoppers boosted spending last month. Yep. The U.S. is going to back mortgages of nearly $1 million for the first time. Ooh. Let's take a look at that. A shack in my city costs $450,000. You're telling me that a shack is going to $1 million? Well, I didn't say that your shack is going to $1 million, but I also don't know what city you're in. But I think it's very easy to downplay real estate. Just be like, oh, why would I pay all that money for presumably like a 2-bedroom, 1-bath or whatever? It's like, well, there's desirability to owning real estate. Federal government is about to back mortgages of nearly $1 million for the first time. The maximum home loan mortgage to be eligible by Fannie Freddie is expected to jump sharply in 2022, a reflection of the rapid appreciation in home prices. Wow. The increase may make it easier and cheaper for some borrowers to buy a home. Yeah, then you get out of the jumbo levels. Currently, government-controlled mortgages back single-family mortgages as high as $548,000 in most parts of the country and up to $822 in expensive housing markets, including California and New York. Those limits are expected to jump to a baseline of $650 and about, well, it says just under $1 million in high-cost markets. Wow. Wow. They're expected to be announced November 30th. And those are going to be for conforming loans, because anytime you exceed that, you're in jumbo territory. Wow. Yeah, well, that makes sense. You want to see high real estate prices? Look at Toronto and Vancouver. Yeah, here's somebody else talking about Seattle. Yeah. Uh-huh. These are high demand places. People want to live. I don't blame it at all. Yeah, this is incredible. All right, what else? So, okay, let's go back to the main page here. Let's go. What do we got? 4 minutes to go? 4 minutes to go. Biden and Xi cool down hostilities in virtual meeting. Virtual meeting? I thought they were going to meet in person. Virtual meeting. Man, I hate Zoom meetings. I like meeting people in real life. Bitcoin briefly drops below 60K. Wow. Below 60. Did we? Let's see. I want to see that. Bitcoin. Oh, look at that. Yeah, it did. Look at it play the lines. Look at it. It's totally been playing the 63.6 level, broke below that, went straight to the 60,000 mark, which is obviously a pretty heavy psychological threshold. Almost fell to my 58,000 level, 58.6 here. Did end up rebounding. This was at 2:20 in the morning. Man, who's up at that time? It's crazy. Gosh, everybody's talking about real estate prices here. Yeah, Tattooed Chef reports after the bell. Why would you buy real estate out of state? It's just a terrible disaster and idea if you don't know out of the area. Just buy where you are. It's unless you don't believe in the area where you are, it's not a good idea. It's very, very bad. Anyway, all right. So what else? Not anything else. Uber's actually up 3.7%. Good for them. Fisker, Li Auto, Darden. I think you might see some recovery stocks up today because there was news about Pfizer allowing their pill to be manufactured by others, which is seen as obviously bullish for ending the pandemic sooner. This is the one that people like to call Pfizer-Mectin. It's not, but it's also a protease inhibitor, and would be a tool to essentially give people who are sick with COVID a pill or a treatment. I think it's like a 5-day treatment with the pill to help prevent death and hospitalization, which is good. I'm all for that. I think it's great. You might end up seeing that things like that end up delaying people getting vaccinated, but hey, you know what? At least there's a tool. All right, let's see here. Michael here says that Lucid Motors is insanely priced with a handful of deliveries. Yeah, you know, who was it? One of the guys on CNBC this morning. I only briefly tuned in, about 15, 20 minutes. But anyway, he was saying, why is it that Lucid has delivered like 100 cars, yet it's up more, basically at a higher value than Starbucks? Sort of an interesting comparison. Yeah, it's called EV euphoria. You know, I personally don't think that EV euphoria is really worth it unless they also have some incredible self-driving technology with it. You know, otherwise EVs are just cars with batteries. Who cares? Like, that's not proprietary. So I don't know. I'm in New York City. Every house is like a matchbox. Oh, because it's small. Well, New York City's beautiful. I love it. Infrastructure package for EVs? Sure, people like credits. All right, let's get the bell. Here we go.
More than offset by the agony of fossil. The agony of fossil. I've never heard of that. The agony of fossil.
Yes, you say he's consistent, Jim, is Tucson GE. Carl?
Guys, there's the opening bell. Watching
what is that, like
fill in a little bit here at the
60-ish% green? Woo! It's exciting. Matterport giving me a green candlestick right off the bat. Lucid, red candlestick at the open, as well as Rivian with a red candlestick at the open. Peloton dropping a little bit here at the open as well. Shaving off some of that euphoria. Does look like we've got Home Depot. Whoops. There you go. Moving up about 3% here. Let's see how Tesla's reacting here at the open. Tesla. Wow. Green candlestick at the open. Maybe Elon's buying. No, it's first minute's always going to be our big set of volume here. Probably some real buy the dip happening here. Elon's probably sitting there like, if it goes to 10.15, I'll sell. Or 10.20.69, sell. And then I wonder if he watches the sticks just come straight down. Big red candlestick. Ooh, the power to move something like Tesla. It's kind of incredible. Ay. All right. So, let's see here. Crypto, Bitcoin sitting at 60,700 at the open here. We've got Beachbody still down 26%. It goes to show you that, where'd it go? Let's just hold. Hold on a second. Goes to show you there's really no, there it is, 26%. There's really no downward limit on stocks. See, people like to think, oh, it's a SPAC. It should stay around $10. No, does not have to. There's nothing that that binds its value to that $10 other than hope. Pretty incredible. I still can't get over the fact that DWAC is stuck at $59. You've got a lot of hodlers that went into that one. I was expecting a whole lot more traders, which in fairness, I mean, it did run to like $160 or whatever and came down from that. That was insane. But the fact that it's maintaining it at $59, that's 6x its par value. That's incredible. Very, very overpriced, but incredible. All right. And we got Marathon, 6.75. Metamaterials, MMAT, 9% to the downside here. Newegg down 10%. Newegg ran a bit yesterday. Seemed like there was a little bit of a momentum run there. Matterport sitting at about 5.68 to the downside. A little dip there after a 22% run. SoFi dropping about 3 1/3. When are we going to get a discount on a firm and Etsy and Enphase again? I'd like to look for a discount over there. Palantir down 1.5. Let's go ahead and take a peek. Let's drop in a firm here. Let's see what we got. A firm. There we go. Okay, it's rotating down. You ask, you shall receive. A firm's down about 3%. Good. If we can get into the 30s or potentially even below the 130s, that would start looking nice. Let's go. Look at Robinhood, by the way, $34. It's almost at $34.04. Burn. Kathy Wood's been buying that one at the dip. You've got Enphase down about 1.5%, sitting at 240. And how's Etsy after that? Retail boost. It's about 1%. Tesla up about 0.4% as well. Look at that. Just wait. Elon might not be up yet. I'm sure he is. But anyway. And look, Wayfair is actually trying to head back to 300. Shocking. PayPal up again. 0.5%. See how those let's see how the volatility is looking like on PayPal. Love to grab some options on it, but it's been so expensive. All right, let's see here. So volatility on PayPal. Let's look at Affirm and some of these others as well. Yep, no, volatility on PayPal is still ridiculous. Very high. Affirm is kind of average. Yeah, slightly elevated. What about Etsy? Ooh, look at that. Tesla's almost up 1%. Etsy, wow. Etsy's quite elevated. I didn't think Etsy was like the entire market's gone up with volatility. End phase isn't that high though. How is the SPY doing? Let's look at that. S&P 500 volatility, it's actually kind of low. And how about Affirm? Oh yeah, okay, Affirm's roughly average. Okay, and yeah, PayPal's still sitting high. NEO's coming back up about 1%, and NEO's historic volatility for options purposes also elevated. A lot of stocks elevated, volatility. Some potential room to maybe sell some puts. Do we get end phase? Pull end phase quickly here. I'm gonna look at some option pricing here. End phase definitely down from some of the substantial levels that it's run to, but still up on a 100-day average. Not bad though. So let's look at Etsy here. Let's see if there's some puts to sell over here. Oh my gosh, Etsy is. How is it at? It's at 276. This thing's gonna run to 300. It's incredible. Ay, ay, ay. Anyway, okay, so let's go ahead and look here. So if we sell some puts for 31 days, oh my gosh, December 17th, 31 days away, which keep in mind, Black Friday is only 11 days away, and there is a Black Friday coupon code linked down below. Get between $200 to $2,000 off, depending on which bundle you get. Link down below. Check out the programs on Building Your Wealth. Price goes up 11:59 p.m. Black Friday. So we have, let's see here, Etsy. If I do some sell puts on Etsy, I mean, we're at pretty high levels here, but for December, a 30-day, I'm at 1615 divided by 280 right now. 5.7%. And if I go for this week, wow, if I go for this week, I get sitting about 2.5%. Well, that's not so great. But still, 7.5% for 30 days. Worst case, you got to buy some Etsy. It's always the thing. Remember that. If you're going to sell puts on companies that you're willing to buy the shares in. That way, if for some reason the market moves, like let's just happen to say you sell some puts the day before Elon Musk decides to dump his shares, you're not upset when you have to buy the shares. Just saying, just as an example. I do wonder what options are looking like on body. Like, let's look at that here. So, first of all, historic volatility has got to be through the roof right now. I don't think it's updated yet because otherwise it's not. There's no way that's today's volatility. No, it's not. Okay, yeah, it's down in the toilet otherwise. So probably take another 10 minutes before we actually get today's volatility. It's a little bit of a delay when these open up. But anywho, we can still look at what the option chain is pricing in. So if you buy a call for $2.50 on Beachbody, expecting a rebound for 31 days from now, what are you paying? Looks like you're paying $1.25, which is $3.75. The stock's at $3.67. You're basically paying 7 cents for this option. This is a dirt cheap option. But the market seems to be pricing in that Beachbody could continue to sell off. In which case, you'd get screwed. How's Hippo, by the way? Speaking of getting screwed. 380. End phase, 230. Oh, no, I'm sorry. 241. I was going to say 230. I think I was looking at Boeing there accidentally. Anyway. Can we short Rivian yet? Have they come out with that yet? Is that possible? Not that I think that's a good idea. Oh, they do have an options chain. Ooh. That's interesting. 31 day. How much is a 31 day put going to cost me? $30. Oh, what a ripoff. Hold on. How's this being priced? $165, $30. 50. Let's go here. Let's see. $10 away. Roughly $10 away. 32. Puts a little more expensive, and we're closer to these puts. Ooh. Let's see. What about the other way around? 22. If I go here, $12 away. Go this way, 24. Look at it. It's running like crazy though. Just in the last couple minutes here, it's gone up like 3%. Gee whiz. And Playboy's up 20%. Wow. That's incredible. That's a very nice movement. But yeah, anyway, puts on the darn thing. Kind of expensive. 30-day put. Gosh. If you bought a put, $31. I wouldn't sell a put. If anything, I'd probably buy. But I don't like shorting because you just never know that look at DWAC, right? I mean, I shorted it and I made money on it. It was great. But still, that thing is holding on. It's holding on for dear life. $60. Ugh. How's NVIDIA? NVIDIA is sitting at $300. Wow. Dang it. When are we ever going to we got to get a sell-off again. We need to get the market freaking out again. I wish there's some buying opportunities. But all the EVs seem to be like super happy. But then again, EV super cycle. You know, I say it, and I encourage you to remember that when we get into another EV down cycle, you know that it's cyclical, that it comes and goes in cycles. Anyway, okay, so what else? Norwegian Cruise Lines, why are they all of a sudden down 6.5%? NCLH, let's see here. Norwegian Cruise Lines. Ooh, let's see here. Individual company news. Okay, Norwegian Cruise Lines. I mean, that was yesterday's news, the stock offering. Unless it was after the bell. That might be why. Oh well. Matterport now under 5% of an adjustment down. Oh yeah, except for Neo, of course. Yeah, that one's just been stuck in the mud. SoFi down about 4%. Let's see if there's anything up going on with SoFi. When does SoFi selling off become an opportunity? Oh, SoFi had an offering. SoFi launches $50 million secondary offering. $50 million. Wait, 50 million shares or dollars? $50 million seems low. Hold on. SoFi. Yeah, okay. 50 million shares. That's like $1 billion for reference. At $20, right? Yeah, that makes a lot more sense. Like $50 million. Why are you on the stock market to raise that? You know, you raise a whole lot more money in the stock market. Just the point. Access to capital. It's the whole point of the stock market. What are you talking about with Tim Cook over here in crypto?
This month, so that's nice.
Oh, wrong channel. And this one.
all seem to have positive momentum, and that momentum can stay there with even a dearth of headlines, but it does help. And when you see those headlines hit, and yet you still see a positive reaction in that people aren't really selling the news per se, that tends to also be a positive. So we have seen new all-time highs by both Bitcoin and Ether, and there's really nothing bearish about new highs, as you can imagine, from a technical perspective.
So taking a look at this chart, which does take a look at that record market capitalization when it comes to crypto, $3 trillion we're talking about when it comes to that, and Bitcoin and Ethereum, again, pushing new records. What we tend to see at these levels, though, is that...
Interesting. Okay, so I just read into this a little more. SoFi is not actually raising money with it. It looks like other shareholders are selling. So it's like SoftBank, Silver Lake Partners, and some of these other companies, they're selling their shares. So they're selling their 50 million shares. The company is not raising money off of this. Well, but that still takes people who are hodlers and makes them sellers, right? So it does increase your market potential liquidity, which is probably why SoFi is selling a little bit. 4%. All right, let's see here. So let's see. What else is moving to the upside? Let's see. Okay, Proterra, Twilio, Didi, Etsy. Hold on. Wow, we'll look at that later. Nike 1.43%, probably on that retail sales data. Tesla's holding on to 1%. Looks like it's about to drop below that. DocuSign 1%. Square 0.87. Pinterest fractionally up here, 0.75%. AMD, Amazon, Salesforce. These guys moving slightly. Little small moves over here. Little tiny moves. Sometimes worth scrolling down there. Look at, wow, Canoe up 9.7%. Why? You know, when we looked at their earnings yesterday and we saw no earnings, just more cash burn, there has to have been some kind of announcement for it to be up. Canoe's price target raised to $9 at Roth Capital. Canoe moves up production launch to 2022. And EV car maker is relocating to Northwest Arkansas. Really? Canoe moves to Walmart's hometown. Wow. Why? Picks Panasonic as a battery supplier. Huh. I wonder where their headquarters is now. Yeah, it's interesting. And then moves up production launch to 2022. See this. So Canoe is moving up the planned U.S. production launch to 22 instead of 2023. That's probably the big news there. From California. Oh, they're moving out of California. Okay. Well, that's not a surprise. That's not a surprise at all. Yeah. Moving manufacturing out of California? No shocker. Canoe is also forging closer ties with Oklahoma. Let's see here. Okay, it's a little bit about the location. Startup currently has branches in California and Texas. The plan is to build 1,000 units in 2022 and 15,000 in 2023. So tiny. So tiny. It's going to be fascinating to see how these EV makers actually end up getting to scale, if they do, or they go bankrupt. And that's what makes me nervous about some of the euphoria in the stock prices of the other ones. But hey, people make money. That's great. Happy for people. So let's see here. Beachbody, Desktop Metal, Blink. Ooh, Blink's had to have news to be moving down like this. Ooh, Kashkari's on. We should listen to him as well. We'll come back to Blank. Hold on.
Former Fed officials, even some current Fed officials, being concerned not about overreacting, but about underreacting to this surge in inflation and the fact that maybe it won't be as temporary as you thought. How do you respond to that?
Well, we're all paying very close attention to the data, and the higher prices that we're seeing in the economy are real. These are real pain points for families that have to pay them. And so no one is making light of that at all. My main point is we shouldn't overreact to what is likely going to be a temporary factor. Let's just take the supply and demand one at a time. If it's a supply side and it's supply chains that have been disrupted because of the pandemic, barring some introduction of some new wave or some new strain of the virus, those supply chains should work themselves out, some taking longer than others. On the demand side, which many people have argued this is really about a demand shock, a lot of fiscal stimulus, we know the path of the fiscal stimulus. Fiscal stimulus provides a one-time boost, and then it tapers off, and it itself becomes a drag on the economy. So unless Congress passes a massive new spending package that's not paid for, there's nothing that I'm seeing in these fundamental factors that leads me to think that this is a long-term change in inflation or inflation expectations. We are seeing pressures that are real, but most of the evidence in my mind seems to be that they're going to be temporary, even though they are real and people are having to pay it. But the challenge is if we overreact by saying, let's just change the path of monetary policy to try to deal with a one-time effect, that could lead to a worse long-term outcome for the economy.
Well,
y'all believe him?
Shortages, constraints, blockages, whatever you want to call them, they don't seem to be going away. If anything, they seem to have broadened. They seem to be lasting longer. What you see in the data, because many Fed officials, including the White House administration officials, are saying, no, this is inflation surge is a lot about the supply chain. But the problem, what makes you say in terms of data, not just a forecast, that it is getting better and it's going to get better?
Well, looking at, just give some examples. I mean, it really is very sector specific. So a year ago, you couldn't get toilet paper when you went to the grocery store. Now, when I go to the grocery store, the shelves are full of toilet paper. Lumber prices skyrocketed. Lumber prices have now fallen back down to earth. I just read a report before I walked in here that Malaysian chip factories are now coming back online to try to supply auto companies. I also recently learned that all the major auto plants in America have restarted. I'm not suggesting that we're out of the woods yet, at all, but many of these sectors are working themselves out. Some are going to take longer than others.
How about demand? Larry Summers, a former Treasury Secretary, well-known economist, has been concerned for some time that the Fed is not going to move fast enough, and it's going to let inflation get so high that the Fed has to move way too fast to pull it back in. He's talking about things like, you've got demand-driven inflation, prices rising because of a strong economy, some people going back to work. And it's not just things like commodity prices, firmer housing prices in a hot market and things like that, although they're contributing to it too. What is the risk that this doesn't go away, that it does become entrenched?
Well, this goes back to, I read Larry Summers put out a piece earlier today. It goes back to what's the economic theory that a one-time boost of fiscal spending, a one-time boost of demand, it leads to higher prices, yes. Does it lead to higher inflation, which means ongoing year after year after year, continuing price increases? I don't really understand the mechanism by which Larry Summers thinks that this one-time fiscal stimulus leads to a change in the path of inflation, unless he's saying, well, inflation expectations are going to become unanchored. The Federal Reserve is never going to allow that to happen. All of my colleagues and I are paying very close attention to the data. And if we thought that long-term inflation expectations were becoming unanchored, we would certainly adjust to make sure that that did not happen. If you look at long-term inflation expectations in market indicators, they are not looking like they are coming unanchored or very high at all. We're seeing a boost of inflation expectations over the next 1, 2, 3 years, maybe even out to 4 or 5 years, but that's really driven about the next couple of years. So we're paying very close attention to the data. I just again say, even if you believe it is purely demand driven, a one-time boost of fiscal stimulus
Okay.
Explain to me how that leads to long-term inflation.
Fair enough, because I think the question people are asking is far broader than fiscal stimulus. And when you talk about inflation expectations rising, they have risen for things like the New York Fed Inflation Expectation Survey, the University of Michigan Consumer Sentiment Survey. Their longer-term measures are rising as well. What about change in behavior from this? Businesses for years, I can't raise prices because someone will have a lower price. That has changed. People wouldn't pay a higher price because they knew they could go to a discount store and find a lower one. That has changed too. People are willing to pay whatever they can to buy a car, for example. Is there a risk that the expectations are changing, that changes behavior, and the Fed has a longer term inflation problem than they thought?
It's certainly possible. I don't want to rule it out and say it's impossible. Of course not. But remember, think about the economy that we came out of before the pandemic. For a decade, we were struggling with low inflation expectations, not just in America, in Europe, in Japan, in advanced economies all around the world. That was driven by things like demographics, technology development, low productivity, trade. Have our demographics changed because of the pandemic? No, if anything, they've gotten worse. And so, we're paying very close attention to the data, but I don't want to just believe that, Japan's low inflation problem, is that in the past now? They're never going to have to deal with that again. I find that hard to believe. And so the key here is, from my perspective as a central banker, is not to overreact. We want to pay attention to the data.
So what do you all think? Talking about not overreacting and potentially tightening too soon. Ran a poll here to see if y'all believe him so far. It looks like 38% of you voted yes, and 62% of you voted no. Not a lot of Fed believers here. Yesterday, if you haven't seen it yet, I posted a video talking about the two paths that the Federal Reserve could potentially take, and one being the Fed overreacting and being totally wrong, and one being the Fed playing 4D chess and being right about the long term. And so it'd be interesting to see what all of you thought. I would encourage you to watch that if you have not yet seen that yet. Isn't this Econ 101? Short-term inflation can drive inflation expectations, which then drives longer-term inflation. Well, Econ 101 might say that, but once you get to Econ 102 and 103, there are many more factors that go into what ultimately drives inflation. And a lot of it comes down to the fact that we are in a hyper-competitive capitalistic economy that is generally trying to reduce prices, not raise prices. We're generally trying to become more competitive, not less competitive. And that sides in favor of reducing prices. So obviously not what we're seeing at the moment. But anyway, let's go back to sticks at the moment. Right after I mentioned here that Treasury yields did pump up a little bit, 1.62 now. This is up from about that 1.58 where we just sat a couple days ago. So back over 1.6 on inflation expectation, or the 10-year Treasury. The 10-year break even has also been moving. 10-year break even. Let's pull this quickly. So 10-year break even. Oh, yep. Another move to the upside. There we go. Yeah, look at this. For Monday, another move up, 2.76 now. All right. Lumber down. Does that mean housing will go down? Probably not. Probably not. So, great macro video yesterday. Oh, thank you for that. Yeah, no, I know the majority of folks disagree with the Fed. I hope they're right. I'll put it that way. I think some of the things make sense. I know a lot of people just don't believe the Fed as far as they can throw them, but I think for the good of our markets and economy, I hope they're right. So Tesla up almost 2% today. Etsy sitting at 2.69 to the upside. Wow. Incredible here. Where'd GGPI go? GGPI. Wasn't that doing well? It was. Now it's actually down 1.15%. Wow. I can't believe he's still talking. hold on a sec. Let's see what could you be talking about now?
Time talking about COVID. Let's not lose sight of the fact that 700,000 Americans are dead.
Right.
A lot of people are still afraid of the virus. That is the biggest issue facing our economy and the global economy.
Well, I think, but there certainly has been a lot of improvement there too, and more improvement expected despite the uncertainty over variants. But let's look at something Bill Dudley, former president of the New York Fed, said today. He thinks that the Fed, by starting to taper so slowly and not being able to finish by June, puts it in a position where it may have to speed up the taper. Let's listen.
The taper isn't going to be completed until June of next year on the current trajectory. That's a very slow path of removal of accommodation, given the economic information that we're seeing. So I think by locking themselves in this way, I think they've doubled down on being late.
He went on to say the inflation rate the Fed funds rate may end up a lot higher. The market's expecting 1.75%. He said it may end up at 3 to 4%. Is that a possibility? Is that a risk?
Well, I can't predict the future any better than Bill Dudley can. And, we'll see what the economy requires, and the Federal Reserve will adjust monetary policy to achieve our dual mandate, as we've all committed to doing. And so is the federal funds rate going to end up at 2% or 3%? I don't know. And neither does Bill Dudley. We'll have to see how things actually unfold. The one thing about this pandemic, every time it seems like we've got clarity, there are new wrinkles that get introduced and new surprises that come. Is the next 6 months going to unfold exactly like Bill Dudley?
Okay, hold on. Let's stop on over here for a second.
0.7%, and this is the best level going back to June when it was up 0.9. And another number coming out, our November read on National Association of Home Builders Housing Index, which happens to be up 3 months in a row. Will it be number 4? Let's go to Diana Olick and find out. Diana?
Well, Rick, a strong beat on builder sentiment in November. It rose 3 points to 83 on the NAHB index. Anything above 50 considered positive. The street was looking for it to be unchanged. Still lower than last November, which hit a high of 90. Builders say a lack of existing homes for sale and strong consumer demand are behind the optimism. Of the index's 3 components, current sales conditions rose 3 points to 89. Buyer traffic also up 3 points to 68. Sales expectations in the next 6 months unchanged at 84. Regionally, on a 3-month moving average, sentiment both the Midwest and South rose 4 points to 72 and 84, respectively. In the West, it rose 1 point to 84. In the Northeast, fell 2 points to 70. Builders still highlight supply chain issues and a severe labor shortage. NAHB's chief economist noting 330,000 open jobs in construction. Also a shortage of buildable lots. Some like D.R. Horton are slowing sales in order to be able to deliver on time. Morgan?
Diana Olick, thank you. We are 30 minutes into the trading session. Here are 3 big movers that we are watching this morning. We're going to start with drug royalty purchaser Royalty.
Jeez. That's incredible. Housing just keeps on booming. It's incredible.
Ongoing, while a taper is ongoing, that's going to provide us a lot more information about what the underlying dynamics are rather than some of these short-term movements.
Okay. Let me ask you about something very in the very near term. Tomorrow, the 10th Racism in the Economy event, sponsored by the Minneapolis Fed, along with the Boston Fed and the Atlanta Fed.
Okay, we're going to come back. All right, let's go look at sticks. So, and also see, do we have any moves here on Bloom? Let's see here. We've got Pfizer. This was the manufacturing we talked about, which is good. It was biggest drop since September on crypto. Europe grapples with surge, cheap pills on the horizon. Okay, more than 10,000 Australians want compensation for vaccine side effects. Wow. Australia's government may face more than a $37 million bill related to its COVID vaccine program, as thousands of people register for compensation from health issues related to their inoculations. This is according to the Sydney Morning Herald. But I swear, when I read this title, I read this as shake my head. SMH. More than 10,000 people have registered for a rare but significant side effect. What's the side effect? Lost income. Let's see here. Sore arm, headache, fever, chills. Really? That's what they've received 79,000 complaints about. These are smaller effects here. 280 reports of heart inflammation, 160 of thrombosis. 9 deaths have been linked to the immunization program, overwhelming majority of whom were age 65 and older. Wow, interesting. Okay, so what else? Seemed a little odd if that was the reason for people getting compensation for sore arm and a fever, but okay. That's what people are getting compensated for in Australia. I guess that's good for them. So let's see. No, not much other news here. Let's try MIT. Nope. All right. Let's hop on here for a moment.
Out there,
and then we'll go to 6.
That want it to work. And if we understand that better, we're going to do a better job achieving our dual mandate, again, which is better for the economy as a whole.
Okay, good. That's done. So take a look at this. Etsy and Tesla both up 3% here all of a sudden. Tesla running a little bit here. It's pretty incredible. Tesla up 3%. Etsy up 3.3%. Lucid's up 6%, so less than it was earlier. Rivian's still up 7%. GoEV's up almost 9%. Crazy. Looking at the downside, you got Blink. We were going to look to see what was with Blink. I actually don't see a reason. It just ran like 17% yesterday. But yeah, now it's just giving back a little bit after the crazy run yesterday. That must be what it is. Giving back 11%. I mean, that's a good give back. Sheeb's at 50. Matterport's down 5.4. I'll let down again a bit. Open Door 5. SoFi 5. Crypto Play is down. Makes sense. There's a Firm still sitting at about 3% to the downside. And I haven't seen Enphase. I feel like Enphase is stuck in the middle. Yeah, 0.62 to the downside. It's nothing. When are we buying the dip on Tesla? How are we going to buy it under 1,000 if it keeps going up? Come on, Elon. Swipe up. Sell, sell, sell. Give us a dip. Give us a real dip. Wild market. Still think Etsy's going to crush it this year, by the way. Mostly because I think these supply chain shortages are really going to make Etsy one of your go-to plays this year for holiday purchases. It's going to be interesting. We'll see what happens. Monday.com up 2.6%. All right. Okay, cool. Well, I think with that said, check out the program link down below. Use that Black Friday coupon. Price goes up 11:59 p.m. Black Friday. Get all my buy-sell alerts if you get in that Stocks and Psychology Money group anytime I buy or sell anything. And, folks, we'll be doing the course member live stream soon. We'll see you. Thanks, everyone. Bye.